The ICC or CCT trading strategy. Does it really work? Well, let's find out. I backtested the last 2 years on MNQ using Python code, and I want to share the results with you. I also did some optimizing work to bring the strategy from drawdown to being profitable. So maybe those variables will be interesting to you, and they might even help you if you do use this strategy or one of your other strategies. Now, if you don't know what ICC, CCT is, man, that's a lot of C's. ICC is some big words, but it's basically an impulse in one direction, a small pullback, and then you're continuing that initial impulse. Hence the CCT acronym, candle continuation theory, big candle, follow the big candle. Now, this is just simple candlestick analysis, right? You're marking out highs and lows. You're looking for closes across those. I'll show you in a second exactly what I mean. Then you're looking for some gaps, smart money concepts for entries, swings, simple stuff. Where did this strategy come from? I think some YouTube guys, not too sure, but I found out about it from people commenting saying to backtest this strategy because they've been getting good results or it might get good results. So I'm a man of the people and I thought I'd backtest it. Now, a little deeper explanation into this strategy, because I learned this in like 10 minutes over some YouTube videos and some shorts. So this is how I understand it, right? I picked the 1 hour and 1 minute time frame. I think some people do the 1 day and 15 minute or the 4 hour and 5 minutes, something like that. But I think a lot of MNQ traders like looking at the 1 minute, including myself. So I thought, why not check this out? So basically you get a high time frame level, okay? You see this yellow line here? This is my level, right? So this candle closed at 11 a.m. Then this low got closed across on the next candle on this 12 p.m. close, okay? So once this candle closed here, the level got confirmed. Now we wait for that retrace, which is in this candle. Or if you look to the right here, you go to the lower time frame. You're waiting for the retrace once you get your level. So here I said at 12 p.m. this candle closed below it, right? Confirming the level. So now we're below the level. We want to come back up to it. That's our retracement, okay? We're sweeping the level. We close above it. And now we wait for an entry, which, thank you for smart money concepts. You know I love smart money concepts, man. I just love these concepts so much. But inverse fair value gap. Ooh. So you look for the fair value gap after the sweep and you get a close across it. That's your entry. I did this drawing wrong. You know, this should be at the close. So my bad on that one. But by the time I realized I used this picture like 10 times in these slides and I was not about to go fix it, my bad. Anyway, so you're in a short right here off the sweep, fair value gap, inverse fair value gap, whatever. The stop goes to the high, okay? The swing high. And you target some swing lows here. You see I drew 3 out and I'll explain which one I targeted in the back test, okay? And that's the whole strategy right there, basically. Now, a little bit into the brains of the back test, okay? One thing I did have to add is a level invalidation, okay? So same as the previous slide, we have this level confirmed at 12, right? Then the next candle touched it like you saw, 12:30 or something. This candle goes from 12 to 1. So at 12:30, it touched it. So now when this candle closes, this level is no longer looked at for any more shorts, okay? So this candle closes at 1. That's it. If there was no inverse fair value gap found, that level will never be used again, okay? Now, a little more details on the 1 minute chart. How do we find fair value gaps, right? So we got the close above the level here. Same example as previously shown. And I said, look back 5 bars, right? So here you close above. So now we're in a valid time to look for an entry. We're going to look 5 bars to the left. We only had to look 1 bar this time. We see a gap. So now the Python code marked out this gap and it waits for the close across. But before entering, it said, did I meet the inverse fair value gap size, right? Because I don't want a 1 tick fair value gap, that's too small. You're going to get too many entries and it's not going to make a lot of sense. If you're actually using these live trading, you know, you kind of want a bit of a gap, imbalance, whatever you guys call it. So I'll show you the numbers that I used in a second, right? And then I forgot to mention up here, but I'm sure you saw it. You also look to the left, but after the sweep, it's not too clear in this picture, but you'll see in the examples. After the sweep, then a fair value gap could show up, you know, up here somewhere. So I gave it a 20 bar time frame. If you don't find the fair value gap after that, ignore the trade. So now, a lot of text here, but these are the configurations I used for the backtest, for the Python code, because you got to give it numbers, right? It's code. You got to give it numbers to follow. So some things I use, the hourly levels only could look back 5 sessions. I mean, 5 sessions of hourly bars is a good chunk. So I thought that was decent. Anything more than that, I feel like the candles are getting too far away. We could just ignore those. The stop, I added a 10 tick buffer above the swings, just because we don't want 2 ticks above the swing to take us out. Might as well give us some buffer. 10 ticks on MAQ isn't that much anyway, especially with these huge stop losses, right? We're going all the way up to the swing. The minimum fair value gap size, I went with 12 ticks. Not too small, not too big. If it's not a crazy volatile day, you'll still get an entry, but you won't get super small fair value gaps. You should be able to see 12 ticks pretty clear. And then, just like you see in the picture, after the sweep, right, after you close above, looking 5 bars back, 20 bars forward. That's what I stuck with default settings. And how many bars to close across the fair value gap to get your entry, an inverse fair value gap? I gave it also 20 bars. So if you sweep 20 bars later, you get a fair value gap bigger than 12 ticks. You have 20 more bars to get your entry, to close across that fair value gap you found. Default settings, I wanted to get a lot of trades in, right? Now the targeting, I have a few here, and I'm going to go into even more detail once we get to that optimizing stage I talked about, okay? So to find the swings for the targets, right? You see these orange arrows here, the span, right? So my default is 2 bars. This right here is a swing low because it has 2 bars to the left and right that are higher than its low, okay? Down here, same thing, left and right. These 2 bars, left and right, are higher than this low. So this is a swing low. If you look at this bar, this is not a swing low, obviously, because the bar to the right goes way lower than it, okay? Now, if you set the span to 3, then this is no longer a target level because it doesn't have 3 bars to the left that are higher than its low. So I set it at 2. It's a little bit tight, but you get a lot of options, okay? And I gave the targets a range, right? Because you're going to have some swings right next to the entry. So I said at minimum, give me a 1-hour trade. At maximum, give me a 2-hour trade. I don't want to shoot for the moon, okay? And it's going to pick the earliest one. So if you have one at 1.1 or 1.8, it's going to pick that 1.1. Secure some wins, right? It's going to look back also 50 bars from the entry. So entry right here, it's going to look back 50 bars for all these swings. I didn't want to look too far back, so I feel like 50 bars was reasonable. And if nothing is found, those swings are found for targets, you just go to 2R. Simple, right? Now let's look at 3 examples, okay? 3 examples. So here, get the level, right? Candle low, close across. This candle closes at 12 p.m. Now at 12 p.m., we go to the 1 minute. On the 1 minute, we're below it, right? We wait for a close above the level. Happens right here. Now, 5 bars back, fair value gap right here. So we go. We have 20 minutes to close across it, right? That happens right here. Real close call, but it closes below it. And we're entered here. Stop at the swing high, plus 10 ticks. You see, it's not exactly there. Plus 10 ticks. And the only target level here, as you can see, was this, but it's at 0.9R. So I ignored it. I mean, the Python, the code ignored it. The backtester ignored it because it wasn't within that 1 to 2R range that we're looking for. So set it to 2R default. Boom, it got hit. Beautiful trade. Let's look at example number 2. Now on the hourly level, we look further back. We look 2 sessions ago, 3 sessions ago, and we have 2 monster bars down, okay? And it closes below a bunch of these. So we have a bunch of levels. But if you look at the 1 minute, we didn't have any fair value gaps to enter off of, or else it would have. Okay, so the level it used was this one here because it was the closest to this fair value gap entry. Okay, so we go up. We want to continue shorts because clearly it's been a down day, right? Continue shorts. We get a close below it, barely. I don't have a variable in here to say, hey, make sure you close 50 ticks below. So this one closed close and it got stopped out right after. Now, third example, on the same day, just 10 minutes later, you see on the left hourly level now is at this swing, which is a pretty swing. I like that swing. So we close below it, obviously, monster candle down. And this was the losing trade right here on the previous slide. So we go up, and once we sweep this new level that we got, right, then we get this fair value gap, close below it, stop at the high, and this one found a swing target. You see here, this swing low, 2 bars to the left are higher, 2 bars to the right are higher, 1.3 R distance, right, within that 1 to 2 R that we're looking for. So we target that and we get out. Those are the examples. Now the results. I know, Peter, quit the yapping. Just show me how it does. Now, it might not look too great, but you gotta wait for the optimization, okay? You gotta wait for the improvements because it gets better. Boom. From March 2024, like I said, about 2 years to February 2026. 700 trades, 38% win rate, 1.65 R. Boom, you lose 35 grand. Not that great, okay? Not that great. But there is hope. There might be hope. Because look, ignore March 2024 to whatever this is, 2025 start maybe. You get some good consolidation here. You know, you're not bleeding money. You're getting some decent wins. That's pushing you back up. But these big losses are just killing you. So I thought, let me massage it a little bit. Let me make this a little gooder, okay? We're going to optimize it. Let's play with some variables. So I started with the targets. I said, what can I do to make these targets better? Because targeting the swings makes sense, but it's just hard to put in the code's words, right? When you're looking at it, maybe you can make sense of it. But this is what I'm playing with here, right? So variables I'm going to change, okay? Well, actually, I should have deleted this, but we didn't change the look back. These are all 50 bar look backs. What I did change is the minimum RR, right? So my default, I had it at 1. So this 0.9 RR would get ignored. But if we have it at 0.8, then we would get the quick profits here, right? And if we have the minimum RR higher, then we'd go for bigger spans, bigger swings, bigger targets. And I also varied the span, okay? Like I said, I have 2. I needed 2 bars left and right. Maybe that's too tight. Let's increase it a little bit. So what happens? Boom, it's a lot of red. It's a lot of red. I know it's a lot of red. But there's a sliver of hope. You see that? There's a sliver of hope. We have one profitable combination. And what is it? A 3-bar swing instead of 2 bars. So you need 3 bars left and right. A minimum RR of 1. So same as we had it. A max of 3 though. So giving it a little more potential for those bigger swings. 50 bar look back and a fallback RR. This one also changed. A fallback RR of 1 instead of 2. So if you don't find the swing, just go for 1R instead of the bigger 2R. And as you can see, the trades are all 505 for each of these combinations, okay? Now, what else can we optimize, right? This one's real simple. The minimum inverse fair value gap size. I had it at 12. I thought maybe that's too small. Maybe a bigger number would do better. And what do we get? One green again. One in the green. I know. You don't see the exact 12 one here because I did in bigger steps. You know, I couldn't do it in one step. It would have taken forever. I mean, I could have optimized anyway, different video. This is what I got. 4 tick fair value gap size, 6, 8, and so on. The golden ticket is a 20 tick inverse fair value gap size. You go any bigger, you get worse. You go any smaller, you get worse. And these trades are using that previous one, the optimized one from the best trades, right? The 1 to 3R and the fallback 1R. So these are all using that. And you get 20 ticks. So minimum fair value gap size, go for 20 ticks. What else can we do? I told you guys I put in work, or I put in some work on this. Let's look at the maximum fair value gap size. Okay, we looked at the minimum. Let's look at if it's too big, should we ignore it? Okay, and also while I was looking at this, I said at the same time, let's check out from the sweep, right? The retracement, the close above the level. How long should we wait until we see the fair value gap that we want to inverse? And here's the results. Some more green. You see, we're making good progress. The maximum fair value gap size on the left here, from none as we had it, up to 100 to 200 to 300. You see, when we let the bigger ones in, it's not doing too good, right? With no limit, you're only at 10,000, 8,000s. With 300, it's basically no limit at that point. But if you limit it to 100 tick size, there's potential here. Now, one thing I didn't like is that we reduced down to 180 trades, which, you know, maybe is okay. Over 2 years, you're trading about every other day. Wait for your good setups, right? Why not? Damn, did I optimize some more? I forgot I did another thing. I said, let's keep going. From fair value gap to inverse fair value to fair value gap to inverse fair value gap, how long should we wait? Because if you wait too long, you know, like I was saying, is the fair value gap still good? Or is it better, like this picture, where it happens 2 bars after? And this is what I got. So I stuck with, from the previous one, we saw pretty good from the sweep, right, to the fair value gap. 5 and 10 looked pretty good. Did I go too fast through this? Hold on. Oh, I didn't even talk about this section here. Didn't even talk about this section. I went a little bit too fast. My bad. So the maximum fair value gap size, the 100 was a sweet spot, right? And then 5, 10, 20, 30, from the sweep of the level to how long we should wait for a fair value gap, right? I tested 5 bars, 10 bars, 20, and 30. And it looks like when we got up to 20 and 30, it got worse, right? 19K, 17K, 11K, 11K. So I wanted to only work with these 5 and 10s, right? So that's why here, you see, we're looking at 5 and 10s. So I kept these there. But I wanted to add in, like I mentioned, how long should we wait for a fair value gap to get inversed? Okay, also 5, 10, 20, 30. And it looks like when you wait too little, you don't do too good. You get way less trades, which might be the biggest factor into this. Way less trades, and you're not profitable and you're barely profitable, right? Same story for if you're waiting 10 bars after the sweep to get your fair value gap, then you're cutting it. You're, not doing too good when you're doing it too quick, okay? So let me summarize that, okay? Let me summarize that because that was a lot of optimization, okay? This is what we're left with. This was the best results, and I'll give you a summary of the results in a second too. But first, the settings, right? What did we change? We said minimum fair value gap size, 20 ticks, okay? So it needs to have some girth to it. The maximum fair value gap size, not too much girth, 100 ticks. Inverse fair value gap search, forward 5 bars. You see on the top right here. This was 20 bars, right? After the sweep, we were waiting 20 bars. So I brought that down to 5. Now, the targeting, we also optimized, like I mentioned. So the swing span, 3 bars. So now only this one down here would be a swing, a target level, and this one would not. The RR range, 1 to 3, give us some more room, and then fall back to 1R, okay? Take your quick profits when you can. Now, the results. These are optimized, okay? I don't think they're that great. They're definitely not beating the S&P 500, but it's progress. Now, if you could replicate this June 2025 to February 2026 for 2 years straight, that would be amazing. But over the full 2 years, you get your 180 trades, 50% win rate, 1.27 R, so barely above 1 R. And you make about 20K, which is that 20% over 2 years, about 10% a year. Not fantastic. You see, from March 2024 all the way to June 2025, you're break even. I mean, you're going to be trading for a year and a half just to be break even. You're going to be taking some money out the account. I mean, I guess if you're this profitable, you probably won't be. But I think this is a foundation, right? This gives you something to work with because, like I've said before, I don't think trading can be this mechanical. This is coded, obviously, so it's completely mechanical. But if you use this strategy and you want to build your intuition up, I think it's a good building block, a good foundation, something you could start with. Just make sure you keep the journal active. Whatever's going on in your mind, just write it down. If you want to skip a trade because you feel like it's not a good setup, skip that trade. Don't follow the rules one for one because, as we can see, when you follow the rules one for one, you're not going to do great. So start building up that trading intuition. I think it's the only way to make a strategy work. So I think that's all I got. Hopefully someone found this useful. Thank you for watching and good luck out there.